stock in focus is something like RVNL, which also reported its fourth quarter numbers. Now, what we are looking at in terms of the fourth quarter margins, they've remained stable at the likes of 6.7%, but it was fourth quarter revenue that fell short of expectation. We are seeing cuts of over 4%. Now, the expectation was for over 8,000 crore of a top line in fourth quarter, but they've clocked in about 6,500 of a top line, which also led to a miss in terms of where the FY25 guidance is. Order book, if we see, that stood at the range of 97,000 to 98,000 crore. The expectation for FY26 being that this would level upwards to the size of 1.25 lakh crore or so. But to discuss more on the strategy forward for RVNL and how was the year gone by, I earlier had a conversation with Mritunjay Pratap Singh, Director Operations of RVNL. So do listen into what he had to say. First off, I want to start off by your assessment of the fourth quarter. I want to understand that the broader expectation as per the last con call was of 8,000 crore of a top line. What has happened in the fourth quarter, if you can give us more details?
Thank you very much, IOC and NDTV Profit. As you said, our revenue guidance for the Q4 for the year is slightly less as compared to the revenue guidance. But as you can see, the revenue growth has accelerated in quarter 4 as compared to quarter 3. The growth in revenue is of the order of 40%. And in the terms of the PAT growth also, it is significant. It is around 48% growth in the PAT is there. Overall, for financial year, as compared to financial year 23-24, Q4 is slightly down by around 5%. But we hope to make up this gap in the coming financial year by our sustained execution and focus on execution during the current financial year. And for the current financial year, we are keeping revenue guidance of order of 22 to 22,000 crore, 20,000 to 22,000 crore.
Okay, Mr. Singh, just want to get your overall summary, if we can, of the year FY25. Now, for FY25, we did see that, there was a decline in revenue in terms of where FY24 was concerned on a year-on-year basis. So if you can just summarize some of the issues, some of the reasons as to why we are looking at this degrowth in this year.
Yeah. Basically, you can see the RVNL is in a transition phase now. RVNL was traditionally only a railway-focused company, and we were getting the railway projects, what we call as legacy railway projects from Indian Railways. And till 2021-22, we were only executing the railway projects given by the Ministry of Railways. Now, from 2022 onwards, we have been diversifying in various sectors, and we have started doing the bidding in various sectors. So now it is a transition phase, and as you can see, during the year gone by 24-25, the turnover from railway sector is roughly down as compared to 23-24 by around 13%. Out of our total turnover of around 20,800 crore, 19,800 crore during this financial year, roughly 16,000 crore is from our traditional railway sector. But from bidding, there is an encouraging trend. The revenue from our bidding projects has accelerated by 68%. And in the coming financial year, we hope to increase it further and hope to make this decline in the revenue from the traditional railways projects by compensating by projects won through bidding in various segments.
Mr. Singh, just a follow-up on that, a two-part question. Firstly, what is the key rationale that we are deviating from the traditional railway business to other projects? Is it because of higher competition or better margins? If you can emphasize more on that part. And secondly, what is the kind of mix that you aim to have in the next 1 to 2 years in terms of the traditional railways and the other projects which you have?
Yeah, thank you. I'll reply you the first question, because it is not so key we are diversifying from the railway projects due to margins not available in the railway projects. But the infrastructure segment as a whole is expanding not only domestically but also internationally. And there is a focus of government of India on logistic cost reduction by way of creation of infrastructure in various segments and energy. And when country wants to accelerate its growth, energy is a huge requirement. So we are focusing only basically this kind of sectors. So other than our traditional railways, our core strength, but simultaneously being good in execution, and which was our core expertise. So we have diversified in metro projects because metro was also one of our components in the railways. So we are executing metro in 7 cities. Then we have diversified into RDSS systems, that is a transmission line, distribution system improvement in 3 states. Then we have strategically diversified in BharatNet projects. That is a natural corollary to our signaling and telecom sector, which we were doing in the railways by building, securing 2 major projects in UP East and West. Then there was a strategic diversification for manufacturing of the Vande Bharat train sets also, along with our Russian partners. And we also diversified in harbor construction in Maldives. And now our focus is energy related fields, that is battery storage system, solar systems, wind power infrastructure, hydro projects. And there is an exciting sector emerging, that is O&M of metro systems. And we are focusing on road projects also because they are similar to the railway projects as far as, and they are simpler as compared to railway projects. Railway projects have much more complexities, and due to their inherent complexities, the execution time is longer in railway projects as compared to road projects. And internationally, a lot of opportunities are there. So we are exploring opportunities in railway sector in Peru, government to government contracting, then in Africa in field of transmission line, roads and port projects, and in Nepal in hydro sector, in Philippines in road sector, in Albania and Croatia in railway sector.
Right,
And
Mr. Singh. Yeah.
yeah.
So given that transition that the company is going through, can you just give us an outlook in terms of FY26? What is the kind of revenue growth that you project? Also, in terms of margins also, from the 6% that we've been seeing in the last few fiscals, what is the kind of scale up that we see in terms of where the margins are headed?
Yeah, in the current financial year, 25-26, we hope to secure our margin of revenue target of around 20, between 20 to 22,000 crore, which we want to have an improvement of around 10 to 15% in our revenue growth as compared to last financial year. And our margin, we are also hope to improve our margin by faster execution, reducing indirect costs. You must have seen this year also we reduce our indirect cost significantly by reducing unnecessary fat and avoidable expenditures. So we hope to see improvement in our margins, which will be coming not only from domestic projects but also international projects where margins are more. And some of the projects which will have a long-term revenue visibility, like RDSS systems or solar BESS systems. So they will have a long-term revenue potential for RVNL.
So if you want to quantify that from 6%, can we see this moving upwards to the level of 8% or so in next 2 years, believe?
Yeah, sure. Means we cannot say in this year only it will move to 8 years, but we hope to see it moving from 5% to around 6.5% to 7% this year, and certainly in the next 2 years' time, we hope to take it to around 8%. And for infrastructure sector, 8% margins is pretty good margin.
Okay, thank you. That was informative. Now, coming to the order book, just want to get the current order book. What's the current order book standing at, and what is the total inflows that you had this year, and the growth that you expect to have in the next financial year in terms of where the order inflows are concerned?
Yeah. As you can see, the order book is a dynamic figure because you have some order inflows and there is a revenue coming out of this orders and execution is done. So order book, present order book stands around 97 to 98,000 crore of RVNL, from out of which around 47,000 crore is from our legacy railway projects, and rest are from various projects where RVNL has diversified. And during the last financial year, total order inflow was around 14,000 crore. And this year we hope to see a growth of around 20% in our order inflows. And as we are focusing on international projects, gradually we want to increase our revenue from international projects of the order of around 25% of the total revenue of RVN
Okay, so
in coming 3 to 4 years.
So 14,000 crore were the inflows. This year you expect around 20% growth, which would be aided by international projects. Which are some of these key areas in which you're seeing higher projects coming from in the international space, if you can specify?
Yeah, international projects, as you see, they are coming in field of railway sector. Railway, we are focusing in Peru. As I said earlier, it is a government to government contracting in Peru, which is a large project. Then in Middle East also, a number of railway projects we are focusing along with the metro projects. Then railway projects in Albania and Croatia. Then transmission line, hydro and harbor projects in Africa, and then road projects in Philippines and Cambodia, then hydro projects in Nepal, road projects in Nepal. So they are some of the our key focus area where we are keen to get the projects, and international projects are a better margin, so they will add up to our not only revenue growth from international projects, but also contribute significantly in our margins.
And Mr. Singh, if I'm not wrong, the current mix for international is around 10%. You expect this to scale upwards to the level of 40%. Is that the correct figure?
Yeah, so it will not, this growth will not happen overnight, but certainly we want to take it to 40% in coming 3 to 4 years. And revenue also, we like to have around 20 to 25% from our international projects in next 3 years' time.
Okay, okay. And my final question to you is about the execution. Now, are you facing any challenges in terms of where the execution is? Considering that, want to understand what's the project update on the Vande Bharat train sets also, if you can give us more light on that.
Execution, all projects, they have got some execution challenges, maybe in terms of manpower, availability of skilled manpower, where we are focusing, and we are training not our internal manpower, but we are also focusing on training the skilled manpower on our various project site. This is our focus of our CSR also, where we do skill development for our manpower. Then availability of machinery. Sometimes regulatory clearances also affect the projects, but gradually they are getting removed. And as far as Vande Bharat is concerned, after initial hiccups for some time, but it is now on good trajectory. And now the designs, etc., is in advanced stage of finalization. And vendors for the critical component as the propulsion system, braking systems, bogies, have been finalized, and we hope to see the first prototype rolling out by June 25 and second prototype in the next 3 months' time. And after getting the clearances from Indian Railways for this prototype, after extensive trials, we hope to see the regular production starting from December 26.
Okay. Is this included in your order book, which is there currently?
Vande Bharat?
Yeah.
Yeah, Vande Bharat, our share is included in our order book because we are having a partnership with our Russian partner, TMH International. So whatever is our share of the total order, that is included